Hey again, guys. So I wanted to kind of talk about the direction of sports card hobby and probably collectibles in general. I always say that the thing that will probably affect the card market as far as pricing is concerned the most is the economy. Now, I don't know how you feel about things, but I don't think the economy is so hot right now. And I wanted to kind of go through some of the greatest companies in the world and kind of show you what's going on underneath. Because when we look at like the stock market indexes, they're misleading. Uh, you will notice that the Dow hasn't moved much, the S&P hasn't moved much, and a lot of that is some manipulation uh, because the Dow is just 30 stocks. It's 30 of the greatest stocks in the world. The S&P is 500 of the best stocks in the world. And what happens is uh, when a company stock goes way down, they kick it off and replace it with one that's way up. A perfect example is just recently on the S&P 500, Walgreens stock has plummeted down to around $20. And so they got rid of that, and they put they put Airbnb stock on there, which at the time had risen to over $140. And so the indexes are not always indicative of what is going on in the world. Now, as we saw during COVID, stock market boom, money coming at everybody is when we saw the big increase in collectibles buying. Specifically, we're talking cards here. And I thought it'd just be a good idea, a good exercise to take a look at the underlying economy. And so I thought I would take a look at some of the greatest companies and some of the greatest stocks, uh, in the country. And of course, there are always going to be some offshoot high flyers. But for the most part, if you take a look at individual stocks, a lot of them have been killed. And I don't think there's any choice but it to affect all disposable purchases. And I've noticed recently shopping for cards on eBay or making people offers that they're jumping on that they wouldn't have done 6 months ago, a year ago. And I also noticed cards being on there that I'm watching for over a year uh, that are priced, what the normal rates used to be. Now I don't know what your experiences are, but I've been picking up cards far less than I was a year ago. And so let's just delve into this. I just thought this would be a good exercise for you to see what is going on in the world. And the Fed raising interest rates isn't helping anything. If you have a variable mortgage, you're really in trouble. It's uh, your rates are way higher to buy a car. We have seen finally a downtick in home buying with mortgage rates so high. I think it was down a little over 8% on this last report. And unemployment is staying low. However, you have to consider that we have the lowest labor participation rate in history. And California just saw an uptick in unemployment. And California always leads the country. California leads the country. So normally it's a few months after California, whatever direction it's going in, you see it hitting other states. So that being said, let's look at this. I pulled up here Nike's stock chart. So let's see. This is a 2-year stock chart. So at its high, it was around 180. And now it is down to 90. They're about to report earnings. It's expected to go down to the low 80s, possibly 80 range very quickly. So a straight downward trend for one of the greatest companies ever created. Let's look at Disney. And people will come up with reasons why these are all horrible companies and they're all down now and they're all mismanaged. But you will see that it's a common theme. This here, that's a 6 month. Let's go to a 2 year. So you will see this was at $181 and it's down to 80. No matter how poor people are, they don't want to give up their Disney. For me personally, it's like torture. But here's Target. Let's take a look at that 2 year chart. My cat is messing around on one of my card boxes in the back. So here is, oops, here's Target at its high, 266 when everybody was buying cards, and now it's 109. Huge collapse. One of the greatest stocks of all time is Clorox, and it's a one of those stocks that just doesn't move. People like to buy it during recessions or during bad times. Look at this 6 month chart, down from 158 to 130. And you can see it's not too volatile, but it's getting back to its lows. Um, Not necessarily a great sign. Company from my industry, a great company. I sold this to buy my first house in South Carolina because I bought it when it was $10 a share. It's American Tower. It's a very well run company, great company. They build cell towers and have a steady stream of income. It's now a REIT. So was $212 6 months ago, and now it's 162. If we look out 2 years, you will see it was $293. Let's look at AT&T. There's only three main carriers in the whole country. If you want a cell phone, you have to get one of the three. And just so you know, if you see those one-offs like Boost Mobile or any of those, they buy from one of the three. They just buy in bulk. It's the same carriers. It's one of the main three. So let's look at AT&T over the last 2 years. This should be a steady stock. It really is like a bond. So you could see if we go up further, you'll see it had a big collapse, and it just continues down. So 5 year downtrend for that one. Let's look at Dollar General. Man, they say when a recession hits, everybody goes to the dollar store, and this has been a Wall Street darling. Here is a 6 month chart from $222 to 105 very quickly. They cited theft as one of the main issues. And let me just tell you that retail is getting killed right now. Now, if people don't have money to go to the dollar store or to go shopping at Macy's for back to school, you could see this has just gotten killed, and it pays a nice dividend down to $10. It was up around 30 a couple years ago. I know because I bought it at 5 during COVID collapse. It was at 37, down to 10. Now you'll say, well, you could go hide out in gold. Well, let's see what gold's doing. Here's a 6 month chart. Let's look at a 1 year chart. See, it's kind of steadied off. If you zoom in, though, it hasn't been doing so well lately. It's even starting to break down a little bit. Now, I can go on and on and on here. I have a whole list of great companies. We want to talk about NASDAQ stocks. Let's look at Kathy Wood, her ETF, and she invests in the up and coming technology companies. If we look at her 2 years, from 124 down to 38. And these are stocks, her main holdings: Tesla, Coinbase. I know she invested in things along those lines. Oh, here you go. Here's the top holdings. Tesla's her number one, Roku, Zoom, Coinbase. You can see some of the big DraftKings. So this is what I'm saying. If you start to look at the underlying economy, uh, things aren't looking so good. And, we are at all-time credit card debt in this country. I just saw a new study where people have depleted their savings from all the COVID money, stimulus money, and they're back to where they started from. We have inflation up. And if I could show you one more thing, this is a big problem. This is oil. And as you can see, just keeps going up and up and up, driving gas prices higher. Gas is like a tax on the American consumer, really. We don't have a choice normally. We have to get to work, have to get around. Now, I remember, 2006 very well, because I'm an active stock trader. And back then I was in hog heaven. I was getting like 5% in savings account. And so we're getting back to, we say, well, I can get 5.5. I don't need to invest. Wow, with interest rates so high, you're going to have all this disposable money to buy cards. If you're looking forward to 5% interest, you're not even keeping up with inflation, especially after taxes. You're losing buying power. So 5% savings account ain't going to be causing any card boom. I can assure you of that. And, at that time, oil was starting to peak higher. And what happened? That was in 2006. The market went to 14,500. Oil was uprising. Interest rates were around 5.5%, if my memory serves me. And shortly after that, that was during the housing boom. The housing bust came. And the stock market went from 14,500 roughly to 6,500. The Dow did roughly 6,500, 14,500 to 6,500, while oil boomed. And then they had to cut interest rates, and they eventually ended up at zero to help the economy. And eventually, we ended up with the sports card boom. So, I think it was Mark Twain who said, history doesn't always repeat itself, but it always rhymes. And hey, who knows? Nobody really knows what's going to happen. I'm not saying because all these similarities are happening now that they're going to happen, or happen then that they're going to happen again. I'm not saying that at all. But it's a time to be cautious. It's a time where I think people are cutting back and being careful on what they spend. I know, as somebody who likes to invest in the stock market, there's so many opportunities arising in these great companies, high dividend payers, that quite honestly, I'm spending more money and saving more money to invest here than I am in sports cards. So I'm not buying as much. But I thought this would be an interesting exercise if you're wondering why you can get better prices, if you're wondering where the sports card market is going. I don't talk sports card prices, as you know. I'm a collector, but as somebody who is really into the economy, into markets, and have followed them for 20 years or so, I just thought I'd get on here and point these things out to you. So that's what I have for you. Thanks for watching.